Hey everyone, Couch Investor back to another video for today. So let's talk about SoFi. We have a couple of things to discuss in this video. A quick comment from Mizuho. There was a group meeting, well, a dinner actually, with Mizuho and SoFi. So there is a little note on that. The CEO, Anthony Noto, keeps on buying. So we're going to have a look at his recent buying activity. Actually recent, he's been buying for a while now. We also have a comment from the CEO with regards to the reverse split. Now, with regards to the reverse split, I made a whole video not so long ago. It's going to pop up in the top right corner. If you want maybe a bit more information on whether it's good or whether it's bad, and the whole explanation and the idea behind voting to get the rights to maybe reverse split the stock. Because right now, it's not that they are certainly going to do the split. No, it's an option to do it. Very important to remember that. So first things first, the note. So Mizuho analyst Dan Dolev keeps a buy rating on SoFi Technologies with a $9 price target after meeting with management. In defiance of macro concerns, management offered a very constructive tone regarding the demand environment for the company's loans, Dolev tells investors in a research note. SoFi's quality member profile 746 average FICO and $165,000 average individual income should help provide resiliency across cycles, says the analyst. He continues to believe that SoFi's diversified revenue streams, durable business model, and Galileo service offerings should benefit its fundamentals in the long term. Now, it's funny to me, if you look at the price target, right? It's $9 now. It's $9 because the stock has come down so much. I believe it was around $14, $16 before. So obviously with analysts, it's a bit of the same price changes sentiment. We've seen the last quarter for SoFi, right? Even with all the headwinds, still performed very, very well. And for the full year, still on track. So what changed here? Just the sentiment has changed. The stock price went down. So they have to adjust it as well. If the stock price goes up and fundamentally nothing changes, you will see these analysts upgrade their price targets as well. It's a game, to be honest. And now we're going to have a look at a quick comment from the CEO with regards to the reverse split. But before, if you want to support this channel, do check out the link in the description below and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Also check out all the other links there. Some of them are extremely helpful and can save you some money. So the CEO, Anthony Noto, yesterday said on the topic of a reverse split, this was a tweet from Brad Friedman, stock market nerd, a great follow on Twitter and on Common Stock. So it says here, this is in case of emergency. We're going through a dislocation now, and we wanted to give our board the option if we enter an even more irrational market. It in no way communicates our confidence in the business or future. So again, this just reinforced my point that I made in my past video. This is just in case of emergency, right? Now they have the right to do a reverse split in case the stock drops below $5. Because if it goes into penny stock territory, then some funds, not all funds, might have to liquidate their position, which will put more pressure on the stock as well. But yes, as I said in the past video, if history tells us something, reverse split are rarely a good thing. But it remains to be seen. Right now, it's just an option. All right, and now the buying activity from the CEO and from one director as well, as you can see here, right? The buying has started a long time ago. So more recently, actually yesterday, another $250,000 buying activity from the CEO. Then 3 days before, he's been buying. Harvey Schwartz, director, has been buying as well. And then all the other activities are basically buying activities for about, I think every time it's around $250,000 or so, sometimes a little bit less, sometimes just on that number. So buying, insider buying is extremely positive. There's only one reason why executives and insider buys is because they think the stock should be worth much more in the future. There are many reasons why insider might sell. So if you're looking at this right now and you're saying, oh, big deal, he's buying. But then when you'll see that he will be selling when the stock price is over $10, maybe close to 20, I don't know, in a year, 2, 3, 4, 5, and you'll panic, remember the sentiment you have right now. Remember, buying, one reason to buy, selling, lots of reasons to sell. And then lastly, I just want to talk about Galileo again, because Galileo, I feel, doesn't get enough attention from retail or maybe even from the news media out there, because Galileo is part of SoFi and they don't really care that much about loans right now, because again, they work independently. Yes, loans affects the overall business of SoFi, but Galileo powers neobanks. Monzo, Robinhood, Dave, I think Wise or something like that, and many, many others. They're basically the underlying infrastructure. So again, a couple of numbers to run through. So last quarter, we had Galileo segments account increase by 58%. It reached over 100 million accounts, which is pretty incredible. It earned a record high quarterly revenue during the first 3 months of 2022. It's up 32% year over year. So that's quite nice as well. And it will continue to grow like that as more and more neobanks emerge. As those neobanks expand and grow, expect Galileo to grow with them as well. The huge increase of accounts is also fueled by both the acquisition of 10 new clients, 2 of which operate in the B2B space, and user growth at existing clients. So we're not just talking about B2C here, B2B as well. Obviously, B2B is a much bigger effect on the company. And so to conclude, CEO keeps on buying, analyst pretty positive on the company. Stock will do whatever the stock will do in the short term. In the longer term, as long as the business fundamentals are going the right way. Yes, even with the noise, with the reverse split, again, it's just an option. It remains to be seen if they actually do it or not. But overall, pretty good for SoFi right now. Yes, macro is not looking good. But micro, if you look at the company itself, numbers are there, performance are there, execution is there as well. So there's really no reason to panic. I'm still holding my shares. No plan on selling them anytime soon. So do share your thoughts down in the comments below. Like and subscribe if you haven't yet. And I see you all in the next video. Bye bye.